because we're getting a lot of the big cap growth names reporting this week, including one FANG man in Microsoft, but we're also getting Tesla and a few other biggies that everybody's going to be watching. What should you be looking at in these charts? All 5 of these companies have really great earnings surprise charts. Pretty spectacular, actually, but the stocks have come down. Are they deals now? What's going to happen with these big growth companies? Let's dive right in and take a look at some of these excellent earnings charts. So the first one is Microsoft, ticker MSFT. A lot of people own this, including myself in my own personal portfolio. Look at that earnings surprise record. Just that one miss finally in 2022 that marred their otherwise perfect track record. They usually are very close to, meeting or just barely beating, but hey, it's a green arrow and it has worked for them for most of the quarters. Shares are down about 19% over the last year. What is going on with their earnings? Earnings expected to be up 3.3% in fiscal 2023 and another 14% all the way in next year, fiscal 2024. Is the stock cheap now that it's pulled back 19%? Well, not really, as we all know. It's still trading at 25 times forward earnings, and those may not stay up where they are. We're going to have to wait and see. But Microsoft, one of the biggies, will this stock still continue to fall here, or did it find some kind of bottom? Those are the big questions for all of these stocks, but especially for Microsoft. Then we're going to switch it over to Intuitive Surgical, another big growth name that has been a big winner for investors. You can see just 3 misses for Intuitive Surgical. 2 were before the pandemic, and then it too just had 1 miss last year. Otherwise, it's got the stellar track record. Intuitive Surgical also is pulled down a lot more, though, but over the last year, these shares are down just 6.3%. And over the past 2 years, you can see after that big rally in 2021, shares are up, but just 3.5%. So not too much gains for longer term investors there over the last 2 years, and they don't pay a dividend. So you weren't getting rewarded for your patience. But the big question is, what is happening with earnings? Expected to be down 5% in 2022, but up 13% in 2023. So will that hold? Or will those earnings come down? It's not cheap, even though it's off those 2021 highs, still trading at 48 times. So the question is, does the market allow some of these stocks to still trade at these higher valuations, or will this market correction bring all of these growth stocks back down to earth? We don't know yet, but this is one to watch. Then we're going to switch it over to another biggie, Tesla, TSLA. I know many of you own this, or you own it in some other way, like through ARK-K, or just some other kind of ETF. But they've got a good earnings surprise track record after the pandemic started, just with that 1 miss there. So I'm going to ignore the few in 2019 because that was way back when they weren't making any money. Now they are, and they've got this better track record. But a lot is going on with Tesla. So they do have the 7 beats in a row, but the shares are down 58% over the last year. That's made them cheaper. They have a PE of just 28. So suddenly that sounds cheap compared to where it used to be in 2021. What do earnings look like? Earnings expected to be up 76% in 2022, but that was back then. What does it look like for 2023? Still seeing some good earnings growth, up 16%, but 4 estimates have been lowered in the last week heading into this number because they put out their sales. that are going to be a little bit weaker. And there are other metrics that the analysts are like, we're a little too bullish. So they've had to pull back. Will the earnings pull back some more, making this a more expensive stock despite the share pullback? We don't know. These are all the things, like for all these companies, still up in the air. But everybody's going to be watching this one for sure. And, I will be too. And then we're going to switch it over to one of the perfect earnings all-stars this week, ServiceNow. Yes, it has not missed in 5 years. I've talked about it in the past on these videos because of this track record, and it's pretty spectacular. Even the shares, which have pulled back, as you can see in the chart, are only down 13% over the last year. That is pretty stellar given that huge rally into 2021 and its huge PE. It has a forward PE of 49. So it's not cheap either. What do those earnings look like? Earnings expected to be up 23.6% in 2022 and another 22.3% in 2023. Two estimates are higher, two have been cut for 2023 in the last month. So none of the analysts are in agreement. None of them are, very bearish. And it just keeps chugging along at this double-digit earnings growth. But will it hold it? And what will happen with this sky-high PE? Yes, it's got the growth, but who's paying 49 times in these kind of market conditions? Somebody is. So this is one we're all going to be watching. And then I'm going to wrap it up with the big kahuna, the one that has not missed since its IPO in 2008. I don't think I'm jinxing it because I say that every quarter, and every quarter it's still got that little green arrow. What did it do last quarter? It only surprised by 3.7%. But hey, that's all it takes. It only takes a penny and you get the beat. So Visa, with the great earnings surprise track record, eventually it will miss, but I don't think it's going to be a big deal when it finally does, because it's proven that it can, just churn out these beats quarter after quarter. Now, what's happening right now with the shares? So obviously it doesn't have any misses, but you can see the shares are kind of trading in a narrow trading range over the last 2 years. It has not had the big sell-off that a lot of other stocks have had. So that is obviously a good thing with these stocks. But people are used to the big gains with Visa because it's just been, for the most part, up, up, up. You can see that 2020 pandemic sell-off was a buying opportunity, but then it's kind of just stalled here. And why did it stall? Well, valuations just got a little too expensive for Visa. It was just too rich for my blood. In 2021, it was trading in the 40s, 40 times earnings. That has come down a bit. It's now trading at 27, but 27 isn't all that cheap either. What do the earnings look like? Fiscal 2023 expected to be up 10.5. Fiscal 24 up 14.7. So that's not too shabby either. So I'm kind of liking what these earnings this is looking like here for the earnings growth for the next 2 years, especially being double digits. That's not easy to find in this market. You do get a dividend paying 0.8%, so not quite 1%, but you're not really buying it for that. You are buying it for the growth. And again, the question is, how much are people willing to pay for the Visa shares for that 10 to 14% earnings growth? And will that earnings growth stay at those levels, or will that, pull back like we've seen with so many companies here in 2023? These are the big questions that await us. So as you can see, this earnings season is looking pretty complicated. It's not just about having a spectacular earnings charts, which these do. It's also going to be about guidance. What happens with those earnings estimates 2023 or fiscal 2023 for some of these companies? Can they hold it at those levels, or will these stocks actually get more expensive than cheaper? We don't know. These are all the questions that are looming out there for this year. So you don't want to miss a single episode because I'm going to be bringing you more charts like this. We have more FANGs still to come. A lot of the big growth names still await us. So be sure to subscribe and get all of our videos. You can find us on zacks.com/YouTube. That's our YouTube channel. Make sure you're over there. Follow me on Twitter or StockTwits, where I'm going to tweet out a lot of these charts. But be sure to get us somewhere, and I'll see you again next time on the Earnings All-Stars charts.